Well, run us through the sense you're making of the market activity we're seeing at the moment, where the market really just seems to have run out of steam.
Yeah, morning, Alishia. It would appear to be so that the market is running out of steam. What we've seen really, what I would think is happening in recent times is that there's really been no driver, basically, for market performance. You're coming into an environment where earnings releases are trickling to a close, especially from within the banking sector. And so far, there's really been no major upside surprise from either within the banking sector or outside of it. So you find, investors thinking that by now we should really be in a situation where we're seeing clear recoveries from the problems of last year, but earnings so far are not really surprising to the upside. Most of them are in line with expectations, but there's really nothing that you could say will just is strong enough really to drive the market. Even results from GTB and First Bank have not been particularly outstanding, so to say. Beyond that, however, you might also remember that before this run of declines that we've seen for the past 2 weeks or thereabouts, we've had a period of gains, which was basically stimulated by the presidential signing of the Asset Management Company bill. A day after that was signed, you saw the market actually take off. About 3 weeks after that now, there's barely, clarity, as to how exactly that organization is going to work and how they're going to clear the bad loans from among the banks. And I think that that's one key thing that investors are actually waiting to see. Would like to know exactly how that company is going to work, how exactly is it going to take out the bad loans from those banks. The little clarity that came out recently really has not been unequivocally supportive. It's not been clear that it's going to give the sort of support really that investors are.
We are seeing, though, within that context, some of the stocks stealing attention, and on that list is Diamond Bank for you. It's amongst the mid-tier banks in the country. It's a bank that has had a number of issues, yet it sits on your pick list because you say of the growth potential it boasts right now. So let's run through the allure you're seeing.
For Diamond Bank, the real pressure, has come from the fact that a lot of banks are moving up the credit ladder and they're basically encroaching into the corporate market segment, which up till now has been, Diamond Bank's real area of play. But notwithstanding, as it stands right now, Diamond Bank has a capital adequacy ratio of about 24%. Which is well above the regulatory minimum of 10%, and that clearly gives you a lot of room to grow deposit, to grow credits, for the bank. And we think that growth prospect is something that you really cannot discount. A lot of engineering has also gone into the bank in terms of cost-cutting initiatives. They've had a project Sparkle, which appears to be running right on steam. Part of the prior results also being affected by one-time takeouts related to the gratuity scheme that they had to take. When you put it all together, the bank is looking, to move some focus into the retail segment. And you look at the prospect for growth, you look at the strong capital adequacy, you look at the fact that operational efficiency as well is improving in terms of streamlining costs, in terms of opening new branches, at minimal cost, basically. I think it's still clear that you have some value within that stuff.
Well, while it is making this move into the retail segment of the market, I mean, competition is just as tough within this space as well. Do you see the bank needing to make, any further acquisitions to be able to compete effectively in this arena?
Oh yes, Diamond Bank is one of the banks that have consistently indicated interest in taking up one of the rescued banks from the CBN. They've been consistent with that, but they try not to jump the gun by going out to state which specific bank they're looking at. What they're seeking really is the sort of branch network that will provide them with the skill that is needed to drive what appears to be the new focus, retail banking. For us, we think that there's still challenges regarding this. First of all, such acquisition, basically, you have a situation where you have to work to integrate two different cultures from whichever bank is acquired with Diamond Bank's own culture in a very seamless manner. You also have a situation where a lot of the rescued banks, even with the coming of the Asset Management Company, will likely still have a number of problem assets on their hands. Some of them will probably still require significant capital injection, even after the bad loans have been taken off. So it's not cut and dried, basically. they're looking to do that, but we think that it's something that could actually prove very, very challenging for them.